Hey yo guys, welcome back to my YouTube channel. This is the Maximum here once again. And listen up guys, um pay very close attention to everything I'm about saying in this very video today. Listen up. Gold is about dumping about 2,500 pips approximately. And trust me, you just don't have to miss out on this move. Gold is about dumping 2,500 pips, and you shouldn't miss out on this move for any reason. Listen up, there is one major skill set I believe every trader should have, and that is it is called the anticipatory skill. You understand? Being able to see future market projections before they happen. Do you understand? It is a very major skill set as a trader. You should try and develop. And for sure, I have the skill set. I can, pinpoint out explosive moves before they take place, and I've done that countless times in the past with high win rates. Do you understand? And I'll pay close attention as I draw this very one to your attention. Now, overall, we can see gold has actually been very bullish for all very long time, all year long. You can see we've been very bullish. Even in the past price actions, we've been strongly bullish. And yes, I am also still long-term bullish on gold. But then market won't just continue moving impulsively to the upside. There are certainly going to be moments of correctional moves. Do you understand? Price is definitely going to, at a time, come back to the origin of its impulse moves for continuation of the intended direction. So first of all, last week Friday, being just the Friday 2 days ago, gold actually dropped 1,000 pips. From this very high here to this very high, and I was actually in this move. I made money from this move that I did. As a matter of fact, I've been making money from gold. It's not just actually my favorite pay. Like in the past, it wasn't a pay I pay much attention to, but lately, and gold has crazy potentials. I'm seeing lots of crazy potentials on gold. So now let's dive in deep. So I will show you why I feel gold is about going crazy. Now let's go down to a 2-hour time frame. First of all, why did we have this very impulse move to the downside? First of all, let's start from this very level. Why did we had this very impulse move to the downside? Why did we not just buy all the way to creating a new high? Now, the reason why the market rejected bullishness is because right from here, you can see this sort of stop hunt that took place in price. It's very high. And see what's happened there. Market created this high. Market created this high. After this high, we had a retracement to the downside, reacted up from this zone, created a new high, but then the new high was unable to, bust out from this very level impulsively and close above this very previous high. But like, look at how wiki the high was. This is just telling you that price was rejecting this very price level at the time it traded up to this very new high. Do you understand? So immediately we busted above the high. We started seeing rejection to the downside. From the rejection, you can see these impulsive moves, these three impulsive bearish candles, which led to structural shift to the downside. You can see this very structural shift to the downside. If you go down to your probably a lesser time frame, you might get to understand it properly, that it was actually a valid structure shift to the downside, as you can see. So what else happens as we had the impulse move to the down, or as we had this structural shift to the downside, a retracement back to the premium array, considering the fact that we are still considering the fact that we've switched from being bullish to bearish. So we should expect a retracement into the premium array for continuation of lower prices. Don't forget, if probably we were bullish, if we were still bullish, would have expected price to just come down to, you know, the discount market and continuation of higher prices we kick in. But like in a scenario whereby I'm seeing a change in trend, short-term change in trend, don't forget gold is overall bullish, but I'm seeing a short-term change in trend. So we had this retracement back to our premium, as you can see. Let me place my Fibonacci exactly from this very low to this very high is the last dealing range. Do you understand? So price retraced back into the premium that is above the equilibrium of the dealing range. That is our premium. So from there, we had a short spike to the downside. Inside this AVG, price actually retraced into a PD array, of course, chased into this FVG, which propelled price to the downside. So the next draw on liquidity, the next short-term draw on liquidity we can capitalize on is just this very low. Like certainly price is coming for this low. I'm actually on a move. I'm actually on a position. So I'm still holding on the position. I'm expecting price to break down this low. I'll take some partials, then I will hold the remaining of my position down to where I'm expecting gold to sell off to. Now pay close attention. Let me carry you through what I'm anticipating on gold. Now, there is a pattern that has been established. I'm not a pattern trader actually, but I know about patterns so much. Trust me, I know about patterns so much, but I am not a pattern trader. But these things actually do work. That's the indisputable fact. Traders, just can't deny. Do you understand? These patterns actually work. Like they do work. Now, take a look at this pattern. Where do you think price is necessarily going to come next? Like certainly going to come next. Look at how we had this bounce off from this very zone here. Like as price tapped into this very line, we had this displacement to the downside. As we tapped into this very line, and the displacement stops here. So price has in the past rejected this zone. So I'm anticipating for price to come down to somewhere here, to somewhere where bounce off from this very zone for continuation of higher prices. So the 2,500 pips I'm actually talking about is actually from selling off from this very level, somewhere here, down to this trend line. Does that make sense? Now let me make it make much more sense. Let's pay attention to the price action we are seeing here. Where was the last impulse move? The last impulse move that took place, the last impulse move that took place on gold, where was its origination? Where did it originated from? It originated from this very price level. The price has high tendency of coming back to this very level where its impulse started initially. You understand? And this actually happens to be a very strong zone. You can see we had this very tap here. Price rejected this price level, rejected this price level, rejected this price level, rejected it here for breaking above it and retesting this very rejection candle and continuing to the upside. So I'm anticipating for price to come down to this very support level, which it broke out from before we can see continuation of higher prices. So I am literally anticipating for price to come down to this zone. It's that simple. Yes. I'm expecting for price to come down to this zone. So something like this. It might take time because don't forget this is our daily time frame. So it might probably take a little time. Let's say a couple of weeks before we have price doing this. So might probably see something like this. Yes, I'll probably see something like this. Long-term retracements into this very zone. After that, continuation of higher prices. Now, why do I think price has a tendency of coming back to this very price level after it must have left it for weeks now? Now, pay attention. Pay attention. First of all, let's go to a weekly chart. Now, this is our weekly chart. As you can see here, this very consolidation that took place here. It's not really a consolidation, but like you can see this very price movement that happened here. This, in a way, is an order block. Let's say it might probably look much more better. I mean, the order block in the monthly chart. Let's look at the monthly chart. Excellent, excellent, excellent. So in the monthly chart, you can see this very order block. This is a bullish order block because it is a bearish candle. So this very order block is actually what I am anticipating to propel price to the upside. Does that make sense? Now, why do I feel like this is a high probability order block? Let's go back to our daily time frame. For those that knows me, there are some starting criteria I put into consideration that helps me classify a high probability order block. First rule is that there must be some sort of a stop hunt. There must be some sort of a stop hunt in price at where the order block level is situated. So that zone, the zone actually swept liquidity. You can see this was the liquidity that was swept out. This very low was stop hunted before we started seeing this impulse move to the upside. So that wasn't just all. We had a structural break to the upside. This also could as well be considered a structural break to the upside. You can see how price took it very, very personal, running all through this high without even creating, bearish candles, apart from these relative ones that existed here. Like price just, as we had this run up below this very low here, price moved impulsively, took out this very high here, and ever since then, it rejected it, retraced back and, mitigated the high at first before continuation of higher prices. But then, this is just the first one. This is the first one, the stop hunt. Then the series of FVGs, especially this very one that was created, the first impulse candle, the first candle with momentum. I am counting on this very candle. I feel this is just the level price is definitely going to react from. And also another factor I am putting into consideration, which also is very, very important, is that this very level here is where the yearly candle started from. This is this very level here. I'll point it out for us. Is where we had our yearly opening price. Now, what is our yearly opening price? The first candle that printed out in 2024. Now, here is our first candle. Follow me as I look for our first candle. Okay. Okay, here we have it. There was no candle on 1st January. So we had our first 2024 candle, daily candle, on 2nd of January, Tuesday, 2nd of January. And let's identify it. Let's mark it out. So this is the let's just put the line here. You can see this is this very candle here. Let me identify it properly. You can see this candle here, this very candle. So I place this red line. This is our first candle for the year 2024. And trust me, based on past price actions, there is a high tendency that we are still certainly going to see price coming back to retest this very level where the first year's candle got printed before we can see continuation of higher prices. Does that make sense? Do you understand me? Now, I am betting you that you can count on this. I'm giving you a guarantee. You can count on this, considering the fact considering the fact we see price coming back to this very level, and just don't forget to place your order here and take this buy all the way to a new high. Trust me on that. Now let's calculate the pips. Don't forget, before we can start seeing, this impulse move to the downside, we're certainly going to see after a breakout from this very low, we're certainly going to see a retracement. After that retracement, before we can start coming all the way down here. So let's calculate it. Let's say we had our retracement up to this very order block here, but I doubt up to this very level. I doubt we are actually going to see price coming back to this other block, but let's just assume. Let's just assume it does. Or probably I'm actually banking more on this other candle. Yeah. So let me just work with it. Banking more on this very level, just price coming back to maybe just the FVG and boom. So let's just calculate the pips from that level. From that level is about 2,500 pips. Can you see it? This is, you can see what the figure you're seeing here is 25,800, blah, blah, blah. Like it's actually 25. It's actually 2,500 pips drop. So after this drop, we are certainly seeing price running all the way back up. So guys, at the end of the day, it's all game of probability, but our job as a financial analyst is to just make sure the probability is in our side, more percent in our side. You understand? So our job as a financial analyst is just to make sure that the probability is on our side. So with this very stuff that I've presented to us here, with these confluences I've just brought to our attention, I believe this should propel price. I believe this is exactly what gold will do. This is a very strong zone, as you can see, a very, very strong zone. So price coming back to the zone shouldn't be a big of a deal for gold. So after that, high prices should be envisaged, and that's just that for today. So meanwhile, every move gold will be making, as it will be making its move down to this very level, I will certainly be, engaging on intraday basis. I'm not a swing trader, so I think I'm just going to have a little bit of a position open to swing it down to this very level. But as an intraday trader, I am certainly going to take bearish trades, sell setups that I'll be seeing on gold from next week onwards. Do you understand? So once I see a bearish opportunity, I'm certainly selling. Once I see a bearish opportunity, I'm certainly selling. So I'm not just going to be selling alone. I have a Telegram channel where I drop setups, signals, and intervals. So most of the setups I'll be taking now as well. We're dropping it for free on my public Telegram group. So do yourself a favor, check the group link, the Telegram link on the description of this video. Make sure you join, and you're certainly going to make money alongside with us. Bless up, guys. If this is the first time you're coming across my content, make sure to follow, subscribe, like, and comment if you've got questions, and I'm certainly going to send to you all. Until next time, we see you guys. Have a nice day.